This next major move is going to be the most important thing to happen to Bitcoin in years. You've got to be ready. Buckle up. If you're new here, my name is Steve, and I help you have less stress and more success by only looking at the facts in the charts. Hit that subscribe button right now. We're jumping straight in. What we have in front of us is Bitcoin in the making of its next smaller move, which could lead to its next major move. Let's break it down pound for pound. We're going to look at a handful of charts, and we're going to start with this one on the daily. All right. So on the daily chart, since back here in May 19th, right? May 19th, we started this trend where Bitcoin formed its low and then a lower low and another lower low and another lower low and another lower low. All right. So essentially that's a downtrend, right? We're creating lower low after lower low after lower low. We almost reversed the trend here on June 14th when we created our first higher high, but we followed it up with another lower low, which broke that trend. All right. It was no longer possible for us to form an uptrend. So price action essentially is in a downtrend, right? If this doesn't look familiar to you, this is just the line chart. When you go here, you can either have the line chart or the candle chart. Either way, you're seeing the same thing. Okay, so I prefer the line chart. It just creates a little bit cleaner way to see this trend as it's taking place. At the same time that we are creating all of these lower lows, the RSI, right, which is overbought, oversold, the RSI was doing the exact opposite. All right, what this is bullish divergence. And you want to have confluence. So we pull up another indicator called the stochastic RSI, and that's doing the same thing, right? That has a low here and a higher low, just like this was a low here and a higher low and a higher low and a higher low, right? So then we did it again with the MFI, the money flow, right? This is also a low and a higher low, right? So we're forming bullish divergence, right? So over the next 1 to 3 weeks, we'll talk about what we expect to play out with this bullish divergence. But in order to really tell a clear story, we got to look at more facts, right? You don't want to be the guy only looking at the daily chart. You don't want to be person overreacting. Oh my God, Bitcoin is up $5, down $5. That person's in the herd. You're not a part of the herd. So we're going to look at another chart, right? We obviously have a death cross. We had a death cross officially, as we mentioned, on the June 19th. Okay. So what also happened on the same day is, according to our rules that we've been using for many years in Bitcoin, is when we have a death cross and price action is below the 200-day moving average, we're officially in a bear market. If we have those two check marks, the exact opposite is true for when we know we're in a bull market. So how can we get back in a bull market? We have to have a golden cross, and price action has to be above the 200-day. Where's the 200-day right now? The 200-day is at 43,000 and rising slightly. For example, on July 12th, the 200-day will be at about 44,700. We need price action above that. Now, the question comes to your mind right now, can this bullish divergence, which will play out over the next 1 to 3 weeks, can that get us above the 200-day? And can that cause a golden cross? Well, let's answer it one for one. Can it get us above the 200-day? It could. Can it cause a golden cross? Not likely. Okay, so we're going to need a little bit more momentum in the market, and we're going to need to officially reverse the trend. But this is not the making of the biggest thing to happen in Bitcoin in many years. What that is we're getting to it. I wanted to give an update on the Gaussian channel, our Quicksand. This has gained a lot of eyeballs on our channel. This has become incredibly popular. We've been following this, and if you're new, I'll give you a 5-second overview of the Gaussian channel. If you're in an uptrend and you go into a downtrend and enter the Gaussian channel, usually it acts as powerful quicksand that will hold Bitcoin down in a bear market for, on average, 1 year. Right? You can see that each time we were in an uptrend and we got caught up in our quicksand, it held us in there and we continued to fall over the course of years. Okay. We had 4 examples of this every single time. The power of the quicksand of this Gaussian channel on the 5-day chart held us down in the Gaussian channel for an average of 1 year. And we've just entered this Gaussian channel for the first time since back here with our fall from 14K back in 2019. Okay, this is major. Okay, this is absolutely major. Now, there's a couple good things and there's a couple bad things. We'll talk about the bad stuff first. We'll talk about the good things next. The bad things are this quicksand is nothing to play with. Just like any quicksand in the world, you don't want to dip your toes in there. You don't want to stick your knee in there. You don't want to stick your torso in there. You're going to get caught up in the quicksand. Bitcoin dabbled with the quicksand starting on May 16th. It had the candle of this candle on the June 5th with the wick enter here, and we said, look, watch out. Whenever we enter a wick in the Gaussian channel, it could spell disaster. Then we messed around and put a body in here. You never want to put your body in quicksand, and we did that for 2 candles in a row. This candle closes in 1 day, 13 hours from now, but here's the good thing. These past 2 candles we printed on the 5-day chart, these are bullish candles, right? You can see this long wick, thin body, right? These are bullish candles. These are good signs. Now, if we pair that with the bullishness of this bullish divergence with these candles that we printed the past 2 times, what we want to do is get out of the quicksand. We don't even want to dip our toe in the quicksand. In order to do that, we need to have Bitcoin get above 40K, which is another major level. This 40K. We want to hold that 40K as support. And by the way, this is rising every day. Okay. So 40K right now, maybe next week, it's going to be even up here, just around 40,300, something around there. But we're going to want to get above there and hold it as support. Now, this is where things get really interesting, because we're going to go into the larger time frame here. All right, we're not going to really talk about the facts of these lower time frames, but we're going to tell the story of these lower time frames and how it impacts Bitcoin's next major move, because that's why you're here. The major move, which could be the most powerful move in the last few years, is on the horizon. And it comes down to our 3-box theory: box 1, box 2, and box 3. You're probably bouncing in your chair right now because you want the latest update on this, and here it is. If you're relatively new to the channel and you're not sure of this box theory, this is something we've been following for many months, well before we hit 65K. We are following this theory, and it's based on math, right? The bottom of the box is a 1.5x multiple of the prior all-time high. The top of the box is a 4x multiple of the prior all-time high. And we've noticed that over the course of Bitcoin's history, we stay in this box during our consolidation. During this consolidation, everyone in the market also says that the bull market is over. They say that there's a lot of problems on the horizon. There's a lot of news that comes out and that says this is a problem, that's a problem. A lot of new people are selling. There's panic, there's fear, there's turmoil. This is where we print the only red candles of the entire run, right? And we warned everybody when we were approaching this box, like, hey, the market's probably going to cool down. We're probably going to have some red months. There's probably going to be some turmoil, but just hold tight. Okay, so the first question is, are we still inside of these boxes? Are they somehow null and void? No, it's par for the course. We're exactly where we're supposed to be. We've done nothing to get out of that mathematical equation of being inside of this box of the consolidation standpoint. Now remember, during this box number 1 and box number 2, the market went sideways, people freaked out, and it was right before our major parabolic run that signaled the actual top of the market. Now, another thing is the RSI, right? When the RSI on the monthly chart reaches above 91.7, it usually does that for the first time in the box. So inside this first big cycle, the first time that we reached above there on the monthly, it was inside of box number 1. You can see this point right here was inside box number 2, and this point here was inside box number 3. What the other 2 cycles have done, which we haven't done yet, was print our second RSI reading at about 90. That usually signals the market top, as it did so with the second point here and the second point here. Now, where it gets interesting is we have one data point that's completely off, completely out of whack, and that's what we need to give an update to, and the critical level of 30K, right? So this data point is out of whack, right? This data point is a major warning sign, because anytime that we've breached this 71 level during a bull run, it spelled that the top was already in. All right, if that sounds complex, just look at the chart in front of you. Price action is rising, and this is our top, okay? The only time we breached below 71 was when the top was already in. Now, price action in cycle 2, going crazy, parabolic. This is our top. The only time we knew the top was actually in was when we breached the 71 level, and then we knew the top was in. This is the only data point that's outside of the norm, okay? We'll talk more about that in a second, but here is the critical piece of information. This 30K that happens to be the bottom of our box that we didn't just happen to add here, we actually added before we even got in. Back here when we were at around 25, 30,000, that's when we created our box theory, okay? It's not when we were, it's not like yesterday we created this box theory, right? This box theory, this $30,000 level is based on a 1.5x multiple of the previous all-time high. It also happens to be the most critical market structure that Bitcoin has right now. Hands down, these are just the facts in the charts, right? We're just talking about the facts in the charts, and the facts are this $30,000 level is the most critical piece to watch going forward. If Bitcoin has the body of a candle close below this $30,000 level, it's going to add, the facts in the chart say, it will add about 6 months recovery time, meaning it will elongate our bear market at a minimum of 6 months, okay? You do not want this to happen. This is the most critical level for Bitcoin. If the body of a candle closes below this 30K, we've broken our market structure. There's a whole bunch of things that are bad. We're outside of our box, and it's going to add, according to the facts, about 6 months to the bear market. Now, on the bright side, if Bitcoin continues to hold this 30K, even though we have one data point that's outside of the norm, we still have the chance to go parabolic, okay? If we hold 30K with the monthly candles. Now, there's going to be somebody that watches and they're looking at the 1 minute candles, and some 1 minute candle goes below 30 and they freak out. They're part of the herd. Don't follow them. Don't follow them. Don't be like them either. Don't pay attention to this day-to-day fluctuation of Bitcoin price action. Take a step back. Look at the bigger picture. That'll help you remain a lot less stressed, and you'll have a lot more success. All right? So 30K is the level to watch, and here's the story, right? We've got this bullish divergence. We're going to see that play out over the next 1 to 3 weeks. That has some momentum to the upside. We also know that these 5-day candles, candle 1 and candle 2, are both bullish. We're going to see if that can take us out of the quicksand. That's step number 1. We're going to see if that will take us and hold this 30K level, right? We want to see this bullish divergence happen, and we know that we're in a technical bear market, but we're going to want to see the next step is for price action to get above this 200-day. If we can hold this 200-day as support, that'll be the most bullish thing to happen in many months, and that would see a large bounce to the upside and hopefully have this start to curve to the upside and have a golden cross coming. That's what we want to see if you're a Bitcoin bull. All right, so that's this next major move broken down. This 30K is going to be the be all end all. If we break that, it's 6 months of turmoil. If we hold it, we still have a pretty good shot to go parabolic and to surprise everybody. Let me know in the comments down below. Also, watch this video here. We'll plug it up here, and realistic predictions on the markets. And hit that subscribe button if you haven't done so already. We'll see you right back here in the next video. I'm going to be doing a 7-day Bitcoin forecast. It'll be a completely new kind of video. Let me know if you're excited to see that. I'm super excited to make it. Peace and love to the fellow underdogs. you.